Hey everyone, Blockchain Bernie here, my latest episode 363. Which crypto exchange will make you rich? And then this is not a get rich quick video, right? You know I'm a serious channel here. I talk about so many serious things, right? But everyone wants to know, where do I at least have the best chance to get rich? If you want to do some things that you know are high risk, high reward, you want to know on what exchanges can I actually do that, right? And that's what we'll dive through in this video. So after this video here, you walk away with knowing what is the difference between a centralized exchange and a decentralized exchange. You know what are the top centralized exchanges, what can you do there and what can you not do there. And you know what are the decentralized exchanges, mostly on the Solana chain, because you know I'm a Solana guy, and guiding you through these decentralized exchanges. And you know, after watching this video, what can you do on the decentralized that you cannot do on the centralized, and vice versa, right? There is a huge overlap, but there are also, for both of them, there are things that you can only do on centralized and only do on decentralized exchanges. And you know, this has been requested so many times on this channel, so I'm doing this right now. Watch it all the way through the end. Don't forget though to give me that like button. It really helps the YouTube algorithm. That's my only ask. I hope it's not too much for you guys, but you can also earn points for it on the Xandeum blockchain. So that said, you know, centralized exchanges versus decentralized exchanges. Let's just dive right into it. And, you know, a centralized exchange means it's being run by one company, right? That company can do anything. They can censor you. They could say, no, I don't want to do business with Tom Jones because whatever. They don't even need to give a reason. They just don't let you create an account. And they are centralized. It's one company, one management, so the boss of that company can just say anything, and they could theoretically just steal your funds, right? You know, we've heard scandals of where that has happened, and they're basically like banks. Banks are also centralized organizations, and they can do whatever they want with your money. So and centralized exchanges are quite similar. So I'll dive into three of them today: Binance, Coinbase, and Bybit. So I'll give you a little bit of an insight how they look like, what you can do with them. And then I'll dive into the decentralized exchanges and the aggregators, right? Because on Solana, there's that Jupiter aggregator that gives you one portal to access all those decentralized exchanges. So now, but let's dive into the centralized exchanges, starting with Binance here, right? So this is Binance, and you know, all those centralized exchanges, they are subject to regulation. So many centralized exchanges cannot offer their services in the US just because the US has very special regulations, which, you know, might or might not be updated or loosened under the new incoming administration. But still, there are a lot of regulations that we don't have in other countries. So many of these centralized exchanges started out in some country outside of the US, and others are, you know, have created special portals just for the US. And by the way, the UK is also heavily regulated. It's also one of those countries where many of these offerings are not possible. So I'm VPN'd right now into Mexico, so that's why you see this little thing here. I just wanted to be able to show you all these exchanges here, so I VPN'd outside of the US. Into Mexico. I'm not using any of these exchanges here in this video. Of course, I'm just showing you their overall portals, and none of this, of course, is legal advice, nor is any of this in this little video financial advice. I don't know your personal situation, so I cannot advise you. Also, I'm not a financial advisor. I'm not a legal advisor or a lawyer, so do your own research, guys, right? So getting back to Binance, this is how Binance works. And what centralized exchanges like Binance can do for you is onboarding and offboarding, right? So if you have some real money lying on some checking account somewhere and you want to buy crypto from it, so you want to convert the real money that you have in a bank into crypto, that's called onboarding. Or if you have some crypto and you want to take it out of crypto and get it into your bank account because you want to buy a new car or whatever, then that's called offboarding, right? And the on and offboarding you can only do on centralized exchanges because there's just no decentralized way right now to do wire transfers to and from a bank account for regulatory reasons, right? That might be possible, and there's exciting stuff that Elon Musk is planning to do with X, and in the financial world, maybe some new things are coming out there. But as for the time being, you need a centralized exchange to onboard and offboard, and Binance is one of the most popular ones, right? So the reason I'm showing you their homepage here is you see markets here, but you also see on the trading section, you see spot trading, right? So what does spot trading mean? Spot trading just means the normal form, right? You want like 5 Bitcoin and you put them $500,000 up there, right? Or you want 2 Sol and you put $500 up there. That's the normal trading. You basically pay it in full and then you own the crypto and you can do whatever you want with it. That's called spot trading, right? There is margin trading here. Where is that again? Margin. So that means you want 2 Sol that normally cost $500, but you only have $50, right? So then you put up your $50 as a collateral. They basically give you a loan of $500 and you get your 2 Sol. But as soon as the 2 Sol come below 450, then you wouldn't be able to pay back your 50 Sol, and then they liquidate you, right? So they sell your Sol, they get $450, they pay back, or you pay back the loan with that, and that's called leverage and margin. And guys, why this is super, super tempting, right? It's like, okay, I have $200, right? I could buy 1 Sol from it, but if I do it in margin trading, I can buy 10 Sol from that, right? So you only put up $200, but then you are leveraged for $2,000, right? The thing is, if the price of Sol goes down 10%, which obviously we all know can happen overnight, right? Then you get liquidated and you lose your $200, right? And that is, something that needs a lot of attention, right? I'm not saying if you're a professional day trader or something, you might be doing that if you just need a little bit of leverage, right? Let's say, okay, I put up like 175 here instead of 200, right? For that Sol, right? Or you put up 90% of it, right? Then it could go down for 90% without you being liquidated, right? But it could go down and never come back up, right? And then you're stuck in that position with a higher loss than you would ordinarily have, right? So all this leverage is completely two-sided. It is the same way. The leverage works exactly the same way on the profit side as it does on the loss side, right? So I generally, and even though this is not financial advice, right, but let me talk to you from experience here from my last, 20, 30 years, right? Avoid leverage as much as you can. And it's so tempting, especially in times when things go up like they did, in January, just a month ago or so, with incoming administration, with, the new year and everything, and the Trump token being released and everything. So everyone was exuberant, right? There was really exuberance in the market. And when there is exuberance in the market, you have a lot of people that buy on margin. And I go into perps also later, perpetual futures, which is a big thing in crypto, not on Binance though, it seems. But I'll go through all the other exchanges there. So be extremely wary with leverage. Absolutely. It's, you know, it's like playing the casino, and it's like some people say like YOLO, you only live once, and just YOLO into these things. You can do that, but I wouldn't recommend it, right? Even, you know, everyone wants to get rich quick, and this leverage seems to be one of these things where you can do it. But, you know, everything that has gone up for so long time, it'll go down as well, and then it's gonna hit you way, way harder if you're on leverage than if you would just go straight in. Okay, so that said, let's go back into the comparison here of all these exchanges. You can do P2P here on Binance. It's like peer-to-peer, so that means there is no centralized organization involved. You just do it with your friends or stuff like that. It's important in some of these countries where many of these things are completely banned, and then you just do it as a private transaction with someone. It seems a little bit shady to me also, but I'm hearing from some countries that they absolutely rely on this stuff here. And yeah, they have advanced trading bots and copy trading and all these type of things. I'll go into trading bots and copy trading a little bit more later in this video, but now I just want to show you all the other exchanges here. So Coinbase has the reputation of kind of the safe haven, kind of the most user-friendly, kind of safe option, super compliant with all the regulations and stuff like that. But they also have perpetuals here, which is a type of leveraged trading. Perpetuals are perpetual futures, so it's like futures contracts that don't have an expiration date. Those are not popular in traditional finance because of regulations for some reason that I personally don't understand. It's like, oh no, we cannot do perpetual futures in traditional finance because XYZ, but they can do futures that do have an expiration date that are kind of just as risky, I would say, as the perpetual futures. Not sure. So some of the regulations that we have are still crazy, and I hope some of them will change in the US here real soon. So yeah, Coinbase does offer perpetuals here. Trade perpetual futures with 0% fees and 20x leverage, right? So it's a kind of margin trading here. The perpetual futures, that you can do it up to 20x, so that would be 5% margin, right? So you could buy one sol that costs $200. At 10% would be $10, at $20. So at 5%, which is that 20x, it will be just $10, right? So you can put up $10 and buy one full sol, and but then as soon as it goes down 5% or even less, because they have a safety margin in there, right? Probably only needs to go down 3% or so in order for you to liquidate your position. So yeah, don't do 20x leverage, right? I mean, it sounds so tempting here, 20x leverage, if you think like it's all gonna go up or it's all gonna go down. So with perpetuals, you can bet on both sides, going up or going down, right? But it can always go the other direction than you thought, and it can do so very, very quickly. And there are some other derivatives here. You can go long and short, take your money further. All these different things that you can explore here on Coinbase. And as I mentioned, it's one of these safe havens. And then the third one I like to show you here is Bybit. As you see, Bybit is a little bit more loud on the marketing side here, as you can see on this page. But they also have all these things like spot trading, futures, which are here perpetual futures, right? So it's mostly perps that are super popular. on crypto, and they are all basically a form of margin trading. And there's options. So you have even gold and foreign exchange here. So Bybit has quite a complete offering, and they are super successful and growing like crazy. So I've just shown you here 3 of the centralized exchanges. There's also Kraken that's quite successful and has their own type of things. But you can pick among these centralized exchanges, and what they give you is on-offboarding, which is important, right? And I personally use centralized exchanges only for on and offboarding, right? I do my onboard, offboard on centralized exchanges. I have my money in there for like 10 seconds, and then after 10 seconds I'll take it out and put it on. When I onboard, I'll take out my crypto and put it into my wallet, because the wallet is self-custody. Self-custody is the key here. If it's in my own wallet, like in my Phantom wallet or anything, a MetaMask, if you're in the Ethereum or EVM world, that's where you control your money. And that's what crypto is all about. If you leave it in the centralized exchange, it's, it's the same as if you leave it in a bank and they have control over it. And that's not why Satoshi created Bitcoin back in 2008, right? And all the other cryptos that came after Bitcoin, they are all about decentralization of control. They want you to have control over your funds rather than one centralized organization, right? But we still need these centralized exchanges to on and offboard. And some people like centralized exchanges because if anything happens, you have a place to call, right? You can call their customer service and tell them, hey, something went wrong, and they might be able to help you in some cases, right? Just because they control your funds, right? So they can help you do this and that, but they could also just steal it, or they could go bankrupt, or they could XYZ, right? They could censor you, or they could tamper with your data if they wanted to, or stuff like that, right? So it is nice for many people they feel safer if they have a centralized place that they trust. But you need to trust that centralized place, right? You really do that? Well, that's another question. But on the other hand, if you're only on centralized exchanges, why are you on crypto then? Right? Then you're only on crypto because you feel like, oh, I've heard other people, prices going up like crazy, so I want to do that as well. And that's not the best reason to be in crypto, right? So, all right, so those are the centralized exchanges. So now let's look into decentralized exchanges. And what I've up for you here is Jupiter, right? So I'm a big Solana guy. I can only talk about the Solana universe here for you in this little video, and it's that Jup AG, JUP for Jupiter, and AG. Actually, the AG is for Argentina, as we all know, as the country code for Argentina, but they just use it for aggregator, right? So it's the Jupiter aggregator here, and it's an aggregator because it's aggregating all these decentralized exchanges, right? So if you were to say, if you connect a wallet here, so let me do that, just to have some demo here. I have my blockchain Bernie wallet somewhere. Let me find it. Let's use this wallet here. So, and let's connect to Phantom. All right, so now it shows me what I have in my wallet, right? So I could try to sell the remaining Trump tokens that I have. I bought a lot actually at a very good price, and I sold most of them and made like $100,000 profit off of that, but I kept some here. So as you see, I have 378 of them, which would give me almost 32 Sol now if I would sell them for USDC. Let's do that here. Yeah, they would bring me like $6,000 right now. Yeah, so, and then And then what it says, it's like, if I want to swap these, right? If I want to make a trade from one token to the other, it is finding here the best routes, right? So it'll route me through all these decentralized exchanges here dynamically, where I can do that at the best price, right? And that is just awesome on Solana. I love to do it. Everything is low fee. The decentralized exchanges are super low fee. They're usually way lower than the centralized exchanges for trading, and Jupiter doesn't add any fees on top of that. So it is, yeah, you know, it's really tempting to trade a lot for these low fees, and you know, have fun with all the meme coins. I usually don't do that, but sometimes if I know there's a new meme coin that will be somewhat successful for a certain amount of time, and I get to know it really early, as was the case with the Iggy Azalea mother token and was the case with the Trump token as well, I go in there early, but I also find places where I sell them, which I did for most of my Trump tokens. I did for all of my Iggy mother tokens in the meantime, by the way, and those were quite profitable for me, and I only do that in very special occasions. So with all the other, and you know, that's Jupiter basically is, let me tell you that Jupiter is all you need to know if you want to do decentralized exchanges on Solana, because it connects you to all, and it automatically finds the cheapest ones, right? There's no reason for you to understand Orca or Meteora or Camino or all the other decentralized exchanges out there, because you can just do it all under one interface, and it's called Jupiter, and it's just awesome to use, right? So that's what everyone does here, and they have perps as well now, right? And they do the perpetual futures themselves, as I understand. So they are not just an aggregator here. They have charts in there, so you can trade your perps here, and that's how they make money, right? With the aggregator, it seems like they don't make any money there, right? Because they don't charge on top of what the decentralized exchanges do. But now offering their own perps, that's something where they make money off of. And you see the charts are really nice. You have all the possibilities here to make market orders, limit orders, to long or short stuff, to select the amount of leverage, right? I don't know how much it goes up here. Look at that, man, 93x, right? So don't do that. You're gonna be liquidated within seconds, right? But yeah, and you saw that on some of the centralized ones. They did like 20x maximum. On decentralized exchanges, you know, they don't care, and you can do like any leverage here, super high if you want to. It's super high rewards, but it's also super high risk, right? And then you can go long or short and do all this here, and it's all on chain, right? You just trade between any token you want to trade and any other token, and it doesn't leave the crypto universe, right? It's decentralized exchanges, but they are also called on chain because it all happens on the blockchain, and there is no, you know, no bank accounts or traditional finance or anything involved, right? And you can do that for years and years and years. You can onboard $5,000 into crypto using a centralized exchange, then get it in your Phantom wallet on Solana, and then take these $5,000 and try to make 50,000 or 500,000 out of it. And you can always think like, okay, I want to do that in, you know, 2 weeks or so, right? And it might work sometime. It's not unheard of to start with $5,000 and 2 weeks later have 500,000 of it, right? It happens every day, trust me, and I've done that, and it's all possible, right? But there's also always risk, and you need to figure out your own way, and that is not easy. to do it in a way that you cannot lose it all, right? You need to have safeguards. And there's that stop loss that so many people are talking about, but let me tell you, it's not an easy fix. It's not like, oh, I'll do my stop loss and then I'm all good. Because with the stop loss, you're going to be stopped out. If you really want to limit your risk, you're going to be stopped out a lot. And every time you get stopped out, you lose a little bit. Like the golden rule is like with each and every trade, put like 2 or 3% maximum at risk, right? So if you have like 5,000 to start with, 1% is $50, right? So do small trades where you can only lose like 100, maybe maximum $150. These trades are small then, and they only give you only a small upside, right? But some of them just move like a rocket, and hopefully they'll never go beyond that thing so that you're not going to stop out in the meantime. And that's the problem with being stopped out, right? It might just go down a few percent, you're going to be stopped out, and then after that it goes up again and you miss out on all the future gains, right? So that's why the stop loss is not an easy fix. But it is very well possible to make a lot of money. And if you just put 5,000 in there, that's your maximum risk, right? But it is so easy to be at zero really soon, right? So you need to make sure that doesn't happen to you. Only risk, like if you have a 5,000 portfolio, only risk 2%, which is $100 with each and every trade, right? Once you're at 10,000, you can risk 200, right? And then that's the 2%. Once you're at 100,000, you can risk 2,000, right? But, you know, it is all not that easy. It requires a little bit of judgment on your end on what things are going to go up. And I think the massive downturn we had the past 3 weeks or so was totally unexpected for many participants here. It could be a little bit expected because we saw that exuberance around Inauguration Day, before the inauguration already. And there was a lot of exuberance. So, and it's almost, for me, it is tough to buy the bottom, right? Like you see something really low, buy it. It's also tough because you think like there must be a reason everyone's selling. Should I now be the one to buy a lot, right? And then what if it goes down another 50% or another 90%, right? But if I'm really convinced of something, some token or some stock or some whatever instrument it is, I have learned to go into the bottom. And I did that on Sol, which was really great. Did that on some other things and some other stocks. But it is tougher for me, tougher than buying the bottom, which is it's already difficult to buy the bottom. But for me, it's even tougher to sell the top, right? If you see the thing going up and you have that high conviction and you think like, this is it, Sol is it, it's going to go to $1,000 to $2,000, $5,000, which I believe it does, right? Then it's tough to sell at 300, at least sell a lot at 300. But it's important, unless it's something that you really want to hold for decades. And there might be some things that you want to hold for decades, right? And like Warren Buffett is holding Coca-Cola for I don't know how many decades now, right? And I think he hasn't sold any. But with many other things, you know, if it's like the meme coins, or if it's what's called shit coins at some point in time, and the smaller things, you know, you don't want to hold them for decades. You should still have a long investment horizon, right? Like 5 to 10 years. That's usually the investment horizon you should have, even if you're an old guy, just as myself. But it should be even easier for younger guys. You have so much of your life still ahead of you. Invest with the long term in mind, for the simple reason it is way easier to predict what happens to some stock or some crypto long term, because you believe in what they can do. it's much easier to predict that than to predict how it's going to be an hour from now or tomorrow or a week from now. Because these short-term movements are out of our control. They are completely out of our control. And sometimes people can make good bets there. And if they win like 51% of the time and only lose 49% of the time, that's a big advantage, right? Sometimes I have a hunch that I feel like this will move in this and that direction short term. But, you know, it can always come the other direction. Right? So you need to be really, really wary there and, you know, not bet the farm on that and everything on that. Make sure if things go wrong, you know, you don't end up at zero or something like that, right? Don't leverage too much and don't put too much in one single trade, right? Okay, so that's my advantage here. One last thing I wanted to show you on the side of decentralized exchanges is one special one that I picked out on Solana, and that's Camino. Camino is famous for kind of the pure breadth of opportunities that they give here, right? So you can swap. It's actually a borrow and lend thing. So you can, if you have some SOL, you can lend them out and you get 9.38% here. And yeah, and you can also borrow stuff, and it's all collateralized, right? So if you borrow funds there, you have to have it in a different token in order to put up the collateral. And if prices move outside of your favor, then your position might be liquidated, right? So it all bears these risks here. You can provide liquidity here, as many of the decentralized exchanges. You know, with centralized exchanges, mostly the institutions provide the liquidity. With decentralized exchanges, and that's actually super interesting, all the liquidity provision is mostly completely permissionless, so anyone can just provide liquidity that helps other people do the trades and swap these tokens, and you get the lion's share of the trading fees because you provided the liquidity there. Liquidity provisioning comes with its own risk. I said that in other videos as well. So it's also something that requires some attention here to monitor it and stuff like that. One of the things that's super popular here on Camino is what they call multiply, and that might also soon be available for the XAND token from my own startup Xandeum here. And the multiply is like a yield loop, right? So what you do is you do multiple borrowing and lending here, so or things like that. So you kind of do a nested lending. So you lend your stuff, you get a token back, then you convert it back to the other token and lend it again, right? And that way you can max out your APYs here. So you're at like 34%, 29%. And that's actually a nice way to increase your yield here. And we might have that for the XAND token, the Xandeum token as well. So if you haven't heard of Xandeum, it's XAND We're building a scalable storage layer for Solana programs, which is super exciting. Our token is XAND, XAND. You can buy XAND on Jupiter. You can also buy XAND on MEXC, which is a centralized exchange that I haven't shown you here. And it's a great way to own XAND because you can stake your XAND token, earn additional rewards, and all these different things. And we're working with Camino to get our XAND in there so that you can get all these high yields here for lending and borrowing. And the risks are definitely there. They warn you of all these risks. I mean, it would be stupid to assume you can get like 35% APY at a super low risk, right? But, you know, with some of these tokens where you see they don't have that crazy volatility and stuff like that, this can be a really great way for people that are hungry for high yields here to do that at a risk level that is actually quite manageable, right? You need to understand those risks, and once you want to do, you start doing that on Camino, they give you that window where they lay out all the risks and stuff like that. But that is also a great way, and it's only possible on decentralized exchanges, right? Okay, so that was my little beginner's guide for trading. Again, don't forget to give me that like button here. I promised you walk away with, knowing what centralized exchanges are, what decentralized exchanges are, what you can do with what. And yeah, I hope I gave you a good overview here. Also, with this channel, I just want to let you know that from now on, we also have a Xandeum channel. It's called the Xandeum channel on YouTube. Check it out. And we will do everything Xandeum related with the exciting things that are coming up right now, like the PNode launch and all that kind of stuff. It's going to be on the Xandeum channel where it belongs. And this channel, the Blockchain Bernie channel, is exclusively about guides for crypto, how you can participate in the crypto community. It's like a broader audience. Whereas the Xandeum channel is really focused on the Xandeum project and what are we doing in Xandeum here. And I hope that helps you guys a little bit to decide what you subscribe to. So if you subscribe to this channel, which hopefully you've done already, then that means you will get sometimes crypto news commentary, which I often do, or just some beginner's guides as I did today, and sometimes some more pro guides and advanced guides in diving into some special things. And yeah, changes that are happening in the market. There's going to be a lot of news, I assume, in the next few months with things that are changing in cryptosphere on the regulatory front. So I'll keep you updated with all of that, and sometimes I'll give you some views into some of these tokens and what's going on with airdrops and all these type of things. So it's a great idea. If you're interested in these things, subscribe to this channel. If you're interested in Xandeum in itself, buying, holding some XAND tokens, running some PNodes, making that storage layer for smart contracts a reality by running your own PNode and all that type of stuff, find the Xandeum channel on YouTube and subscribe there. It's going to be a lot of content out there. So for today, thanks so much guys for watching.